All right. Let's see. I'm just going to take a quick second to make sure everything's working out here. Okay. Looks like we should be live. So, how this is going to work, take a second to let everybody who wants to get in here get on the stream. But I'm going to go basically through three main things in relation to the earnings report that we're going to get here, my expectations around those. And then I'll try to answer any questions and everything that we get throughout the stream, and then any questions after the stream in relation to the earnings or just general stuff about Xtract One. So the kind of three main things that I'm going to walk through for the expectations for this report um, is the revenue, the bookings, and cash flow. Those are kind of the three main things that I think are most important to kind of look at, and also most important to have, a good idea of expectations and things like that. So first of all, when it comes to revenue, Extract One is really kind of still hard at this point to predict any meaningful number as far as revenue goes, and that's because of a few reasons that I've talked about before. One, really, we don't get all of the contracts announced. The contracts that we do get announced most of the time don't really have clear, detailed timelines and dollar amounts attached to them. And even then, we don't know whether they're subscription or upfront. And so it makes it really hard to determine when revenue from those contracts is actually going to fall through into each quarter and how much revenue they're going to get and whatnot. So it's still pretty hard. Now, we do know that the Ventum Capital analyst, he did trim his revenue. I was trying to pull up the full report. I thought I had the full report here, but I'll just show you guys from the article. He did trim his revenue from 4.8 million to 2.8 million, while raising his fiscal 2027 estimate overall. And he cited the reason for that was deferred orders and broader macro hesitation. Now, this I think he's saying in relation to the one gateway, maybe, and who knows? I don't, whether or not this guy has some sort of information that we don't know. It's possible. I think either way, he's probably going to be sandbagging it here, is just my intuition. Um, I wouldn't be surprised, and I would be totally fine if revenue came in between the 3 to 4 million range, 3 to 3.5, 3 to 4 million dollars. And then if bookings comes in really nice, he can go and he can say, they had a revenue beat and record bookings, and we're going to raise our price target again. But the main thing that I want to get across here with revenue is I don't think we should be expecting any blowout number here necessarily on revenue. It's possible, and I would love it if that happened here. But just because of what we've seen with the contract announcements that we do have, also combining, this analyst note here, again, it's hard to predict, and unless he has some sort of knowledge that we don't have, it's going to be hard for him to predict as well. So he could be wrong here. We could get a big number revenue wise, but I would just say in general, I don't think we should be expecting anything crazy from revenue. That's just my thoughts on there. Again, you guys can let me know in the chat here or the comments later in the video if you're rewatching this on the recording. If you think I'm wrong, and I do want to know though. When you guys say, "Oh, I think revenue is going to be this," I think revenue is going to be that. Give some reasoning, and we can kind of talk about it and have a good back and forth. I think That's the best way to do it. Because if we just kind of go, it's just a gut feeling, well, that doesn't really mean anything. So um, that's what I'll just say around revenue. Again, really hard to predict, but we should be expecting probably somewhere around 3 to 4 million, at least from what we can tell so far. And part of the reason that, and that's where I get into bookings here, is a lot of the contract announcements that we've got were kind of back end of the quarter, right? And so, especially really in July, if we take a look at the contracts and contract announcements here, so remember, um, let me go to page 2 here, actually. So remember, the quarter that we're going to get these earnings for, the Q4 report, is May, June, July. Okay. So if we go back to May for contract announcements, right? Really, the only contract announcements we have in May, we have the master supply, which really isn't necessarily a contract announcement. Again, that was a master supply agreement with a global entertainment organization. We were all speculating. We still don't know what it is. But a master supply agreement is essentially setting up the framework for them to be able to easily put in purchase orders for, X amount of gateways at different locations. And it's already priced out, it's already streamlined. Everything is worked out. So it's almost like a master contract that you can just pull from. But it's not necessarily any firm installations starting off there. So we don't really know, that could definitely be, obviously, it's a global entertainment organization, could be contributing to a lot of bookings, a lot of revenue here, but we really don't know. Colorado Rockies, we did get that announcement towards the end of May. Again, don't know exactly when that was installed, but definitely could fall into the quarter there. And then we really didn't start to get much until the end of June. So Xtract one at San Mateo Medical Center. Then we got Mecklenburg County Schools in July, right? And then we got a few different ones in July. We got, let's go back here. Meridian Public Schools, that global performing arts company that, again, we don't know exactly. But that one did say in the contract, remember, that they were going to do, they had already installed some in 2025, and they had some contracts in that, or some installations not happening until 2026, right? The other big one that I'll get to in a second is also 2026, but we also had Volusia County Schools. That's the really big one. But again, that was in August that it was announced. And then obviously in August, we also got that 2.6 million follow-on, and then a couple of more in August and September. But really, again, this earnings that we're going to get, this report we're going to get, is for May, June, July. So first, for revenue, just a quick note on why revenue probably or might not be that high is because a lot of these contracts weren't until the end of the quarter. So if a contract is signed, let's say in July, it might not actually even be installed until August or September. Also, even if it is installed in July, you're only maybe receiving some of that revenue if it's a subscription contract. If it is installed in July or June, and it is an upfront contract, that's the only time we'd really get a large chunk of that revenue in the Q4 report. Now, as far as bookings go, right? As far as bookings go, most of these should show up in bookings. The only ones that we're really kind of not quite sure about are these two right here. Well, really, I would say this one actually is probably not going to show up in bookings because it wasn't announced until August 14th. There's a chance it took them 2 weeks to get the press release out and dial in all the details. We'll see. But either way, the installations aren't going to happen until 2026. So that one is an iffy whether it's going to be in the Q4 bookings. This one, I think there's a very good chance that this one is in the Q4 bookings, because this one, Volusia County Schools, That's the big one, again, with 48 Xtract 1 gateways, some of which to be installed in 2025. We know some of them have already been installed. And the second phase in 2026. And the reason I say it's probably included in the Q4 bookings, because even though it was announced August 5th, from some of the documents that we've gotten from the actual school board um, documents and in relation to the contract, we know it was in the works for a little while. And also, if you look at the calendar for August, where's August? So you can see August 1st was a Friday. And then August 4th, I think, was a Canadian holiday. If I'm not mistaken, you guys can correct me if I'm wrong on that. But I remember looking it up, and I think August 4th was a holiday. So really, it would have had to been like signed and done, and they get it out in one day. If they didn't sign it until the 1st, they have really the long weekend and the 5th to announce it. That's why I'm thinking it was probably finalized in the last week or so of July, and then they put together the press release and they didn't get it out until August 5th. So that's why I'm saying there's a good chance that this shows up in bookings. Now, if this does show up in bookings, we kind of can do some basic math here. We know that the Volusia was about, I think, 7 million total Canadian. I think it was like a $5 million US, but Canadian dollars, that's about seven or so, maybe a little over $7 million. And then we know some of the amounts for like Meridian, and we had Morgan County Schools as well that wasn't announced. You could kind of put together 10 or so $1 million from the contracts that were announced. If the Rockies also, depending on how many gateways were involved in that, that could be, if they do the whole stadium, 20, 25 gateways. We don't know if it's kind of a phased thing, and whether or not all of those phases are going to show up in one bookings. But I think we could definitely say pretty close to 10 million from the contracts that we know of, right? And so, and again, that is if the Volusia County is included in these bookings, because that would be a good chunk of that. And then, of course, we have the contracts that were not announced, right? And so, yeah, just so great comment. Obviously, you can't rely on the PRs. Sometimes they can vary and they have a long installation, but generally that is in relation to the revenue wise. And yeah, there have been very few instances where they announce a contract that they either weren't allowed to, or for whatever reason the press release was delayed for a couple of quarters, and then they end up reporting or giving the press release. And so it's like, okay, that bookings was already actually accounted for, that was in the press release that we just got. But I think really the only one that applies to that here is the Global Performing Arts. That's the only one that they really actually reference. They did deployments in dozens of locations in early 2025, and then further deployments going into 2025 and 2026. So either way, we don't have numbers for this one anyway. So I think most of the contracts or most of the contract announcements, I should say, that we got here should be just contracts that were actually booked in the quarter. And so, yeah, that's what we're looking at here. The last thing that I want to get to is cash flow. And again, if you guys have any questions or anything, definitely put those in the chat. And yeah, again, the cores, we're starting out with 4 lanes. We don't know if more are planned to deploy after. And even if there is phases, sometimes all of that is included in one bookings as long as the phases are pre-approved and they're going to do it. It's just, we don't know. Maybe that's 3 months from now. Maybe that's, after a certain break in the season. We just don't know, right? So again, I think even with the four gateways and some of the other schools, that's where I'm saying roughly around that $10 million mark. And then obviously on top of that, there's all of the contracts that have not been announced. Because again, for all of you guys that are newer to Xtract One technology stock, a lot of their contracts, especially with big brands, they don't allow them to do press releases. That's why a lot of times they won't name the company, or some companies just flat out say, we don't want a press release, period. Um, and so, there could be several other contracts that we don't know about that are going to also be contributing to bookings and to revenue and things like that. The last thing that I want to talk about here, and this is kind of where it gets interesting. This is kind of the fun part. Um, Cash flow. So I'll just say it right now. I think there is at least a 30% chance that we are cash flow positive. So let me stipulate here. We are going to be cash flow positive in Q4, but that's only because of the offering that they did. But I'm talking about from an operating cash flow standpoint, right? So I think I'd say, yeah, 30% chance or so that Extract One is cash flow positive in Q4. Again, 30% chance. That's saying, it's less than 50% chance. But I think they have a shot at it. And I think they have a really good shot Q1 at being cash flow positive. Now, let me be very clear. Cash flow positive is not profitable. There is a difference here. And so, for any of you guys that aren't necessarily familiar with the intricacies of accounting and the differences between cash flow and profit, basically, to put it very simply, cash flow is simply a measure of the amount of cash coming into and going out of a business, whereas profit is based on accrual accounting. Essentially, profit includes expenses and additions to revenue that are actually not cash. And so, for example, like a good example would be stock-based or share-based compensation, right? The share-based compensation doesn't cost Extract One anything to give to their employees, right? But it is listed as an expense on the income statement and it counts against their profit. It doesn't count against their cash flow, right? So if they had, let's say 4 million in revenue and they had 4 million in expenses, that would be a net zero, right? As far as profit. But if some of those expenses were actually stock-based compensation, then they would actually have positive cash flow, even though technically their profit would be zero. Other things that are expenses that aren't actually cash, big ones actually for Extract One, because of their business model specifically, is depreciation. So a decent portion of how they recognize the costs of their subscription contracts are depreciation, because when you have a subscription contract, the customer is actually leasing the gateways, whether it be Smart Gateway or One Gateway. And because of that, Extract One technically still retains the ownership of the product. And so the way that they account for the cost of that product is they depreciate it, just like you would depreciate the value of, when you buy a new car, it loses value over time. If you were to go try to resell your car 3 years after you bought it, you wouldn't be able to get the same amount for it, right? And so they account for that on their income statement, and it actually counts as an expense against their profit on the income statement, even though they're not actually spending that money as an expense. And so again, that gets added back into cash flow. And so a decent portion of Extract One's expenses are actually depreciation. So depreciation, amortization, and share-based compensation. So you can see actually in Q4, we'll just look at here, right? This is the cash flow statement. Again, this is my spreadsheet. You can go and actually look at the original one from their IR page if you want to. I just like having it all here and being able to compare the quarters. But if we just look at Q3, right? The share-based compensation portion of adjustments here is about 220,000. Then we have 360,000 or so of depreciation and 214,000, 215,000 of amortization. So add that up. That's 7, almost 800,000 of their expenses are not cash at all, right? And you can see some of these other things too. Loss on inventory, um, loss of retirement of assets and finance costs, things like that. Um, Anything that isn't actually a cash expense, they add that back. So you start with the net loss of 3 million, and actually after the adjustments, you can see it's only 2.2 million, right? And then you have other adjustments, and these other adjustments include things like deferred revenue, right? And this is really the depreciation, amortization, and whatnot combined with potential deferred revenue is why I think they have a shot at being cash flow positive this quarter, or in the next report that we're going to get, and they have a much better shot even in Q1. And the deferred revenue, what that is when a company, this is kind of goes for any company, when they sell a product, you can't actually record revenue for that product until you install that product, until the whatever the customer is you're selling to the customer has been fully delivered. And in this case, because the contract is to install the systems, the installation is the point at which Xtract One can actually recognize any revenue. So what that means is any sort of deposits or down payments that customers give Xtract One, because usually in any sort of contract, when the contract is booked, the customer usually pays some sort of deposit or down payment, especially if the gateways might not be installed for a couple of months or more, right? And so, especially when you get those phased installations and things like that, you have these deposits and down payments. Well, Xtract One can't record those as revenue because they have not installed that product, right? And so, because of that, the profit for that quarter or the loss is going to look a lot worse than actually the cash flow of the business, right? Because if we get, let's say that like 10 million, let's say that we get the 10 million and there's another, you know, 5 million or something that we don't know about, right? Again, just throwing those numbers out, not saying that it's possible, but we know roughly about 10 million if the Volusia contracts or contract is included. We're probably going to get at least 10 million in bookings. So let's just say 10 million. Even if there's, say, like a 10% down payment on most of those bookings, that's $1 million there, right? And so when we talk about, things like that, that can really eat into or help account for the loss and potentially get us to cash flow positive. And if we look back at Q2, and again, I didn't really cover this because there was some, I probably should have covered it a little bit more, but there were some other things that made it so that it wasn't quite as big of a deal as I thought it was. But in Q2, we were very, very close to being operating cash flow, or to having positive operating cash flow. You can see here in Q2, the negative cash flow was only $245,000, right? They were very close to being cash flow positive. And actually, in Q3, the only reason we had the only reason that the loss was so much bigger as far as cash flow goes is a lot of expenses related to one gateway. And so you can see here really quickly, let me just show you this. So if we go back to the income statement here, again, this is just my spreadsheet. if we look at bookings for Q2, right? Q2 bookings, 13.5 million, right? It definitely jumped up from some of the other quarters here. Well, take a look at deferred revenue for Q2. Net additions to deferred revenue was almost exactly 10% uh, of that number, the 13 million in bookings. Now, there's always, or not always, but a lot of times deferred revenue that's being recognized as revenue, so some of that gets depleted. But you can see we had a big jump in deferred revenue compared to other quarters, right? And we also recognized a lot of receivables as well, and that's partly why I didn't make such a big deal of it, because um, we're not going to do that every quarter in the coming quarters. But if you start to get big bookings numbers, right, and revenue starts to increase, you have a shot. If they get another 1.3 million like this, and expenses aren't growing and revenue grows a little bit, you're going to get very, very close again to being cash flow positive, and definitely having a very small cash burn, even if you aren't cash flow positive. Another thing that I will add on to this, and I recommend, I was going to show it on here, but it was lagging when I opened it up. But I recommend you guys really go back and watch like the first, I think it's at maybe the 2 or 3 minute mark of my last interview with Peter, where he was talking about the cash flow, because we were talking about the offering and whether or not they needed the offering, because they said in the earnings that they didn't need any cash, and there was this big kind of confusion, and a lot of people weren't happy, myself included. But one of the things that he says in that interview is, he says that May, again, this quarter, this fourth quarter is May, June, July. He says that May was cash flow positive, right? Now, that could be for just because of the timing of certain expenses that they have to pay and whatnot. Sure, definitely could be possible. But that is a very good sign that even just 1 month out of the quarter, they're able to put more money in the bank than they're pulling out, right? And so, again, that's what I'm saying. Not a huge chance, but I'd say there's maybe a 30% chance that we're cash flow positive this quarter, and an even larger chance in Q1, because we'll probably also get an influx of revenue as well in that quarter from a lot of these bookings that we're getting, especially if we get upfront contracts from some of these schools. And so I would be, if I'm going to kind of summarize overall my points here, revenue, I don't think we should be expecting anything crazy. 3-4 million, somewhere around there. If it's more than that, awesome, great. Bookings, I think we can make a pretty good case from the press releases that we've gotten, if Volusia is included in the Q4 bookings, that we're at least going to get somewhere around 10 million. Hopefully more than that from contracts that weren't announced. And then cash flow. Cash flow is something I want to really keep an eye on, because, again, Peter has hinted for the last few quarters at being very close to cash flow positive. They were in Q2. They had a lot of expenses. And again, go back and watch that. Just even the first 5-6 minutes of that last interview that I did with Peter. He talks about how Q2 was almost cash flow positive, and how Q1, really a lot of the jump in expenses there were expenses related to the One Gateway and ramping that up and getting the supply chain set up. You can see even the line item here, prepaid expenses and deposits, jumped big time. And the negative here, again, is contributing to the loss. So that's cash that they spent when in the parentheses there. So 1.1 million, that's actually more than they spent in like the last 5 quarters combined. So that was a big number there that contributed. And again, they didn't really get much bookings. If you go back to the bookings for Q3, only 4.6, 4.2 the quarter before. So if we get a big bookings jump and we don't get all those expenses that we had in relation to the one gateway, and we get some more revenue here, that's where we're getting very, very close to cash flow positive. So overall, that's the kind of the main things I want to talk about. I'll stay on here for another minute or two, see if anybody has any questions. Let me just go through the chat here. Um, uh, let's see. I would say the worse Q4 performs, the better. So that is kind of true. Like easy example is the Volusia contract, right? Say Volusia doesn't make it into Q1 bookings, or sorry, Q4 bookings, then it would be in Q1, and Q1 would be even bigger than it would have been, right? Same thing for a lot of this revenue from contracts that were signed late in July. Maybe those contracts are, if they're not getting installed in July, they're likely getting installed in August, especially if they're schools. They want to do it before the school year starts, or at least some of them before the school year starts. Then that's just going to make Q1 look bigger. No, it's thank you guys for coming on and watching. So I appreciate it. It does take some time to do this, but that's fine. I enjoy doing it. Let me see here. From my understanding, Evolve's business model focuses on SaaS with ARR, which is why they're focused on growth. Will Xtract One's business be similar? So I think there is a pretty good likelihood that in the long run, Xtract One tries to push more towards the recurring model. So Evolve, for anybody that doesn't know, Evolve is probably Xtract One's major competitor, along with Chea. Evolve did have a very, very similar business model to Xtract One, where they kind of offered a pretty good split of upfront contracts and subscription contracts. I want to say in like late 2023, they decided to make a change and shift almost their entire business model to just subscription. Now, they did it through a licensing agreement with some larger distributors, and because they still wanted to offer the ability for customers to pay up front. So essentially what they do is anybody that wants to pay up front, they have them go through this third party, and the third party, they pay up front, and that third party then pays a subscription fee or a license fee that's kind of on a recurring model to Evolve. So that allows them to shift most of their revenue to subscription revenue. I think in the long term, obviously for Xtract One, subscription revenue is more profitable. It has a better margin long term. Obviously, initially it takes you a little bit longer to make your money back as opposed to with an upfront contract. But long term, you get that much better margin because by the time that you've already covered your costs, now you're making a much larger fee. Whereas with the upfront contracts, going forward from the upfront revenue, all you're making is the support and maintenance fees. So I think there's a chance that they do, but if they do that, it's probably not going to be for at least another 2-3 years. And I don't think it makes. We'll have to see. I think it makes much more of a difference whether they're able to execute on one gateway and just growing the business in general. And then we'll just have to see from there. Let's see. Wondering how much production and installation expenses will be affected as they scale. So the production is done through a third-party manufacturer. Those costs will likely come down. They already kind of did. We did see that with Smart Gateway. As they grew more and more production of smart gateway, we saw those margins go from the low 60s all the way up to 70%. And then obviously once they implemented one gateway, we're kind of putting ourselves back at the beginning of that ramp. You saw the margins come back down into the 57%. And I think once they're able to ramp that, then we'll see those production costs come down and those margins again come back up to that 70% range or even higher if one gateway is really able to kind of get a better margin on that. Installation expenses is just kind of a variable cost with the product. It's something that's just going to be attached to every sale. So I don't think that will have necessarily an effect on their ability to scale. And I guess maybe if they scale dramatically, installation costs could come down because you have more products being installed within each given area, and you don't have just kind of a smattering here and there. It's possible, but that's down the road. Let's see. Thank you. Again, I appreciate everybody saying thanks. Again, I'll continue to say thanks to you guys for tuning in and watching the videos. It's fun, and it's fun to watch this company, and hopefully we all get to watch this company be very successful in the coming months and years. I think looks like that's all of the questions for now. Again, for anybody that is kind of tuning in late, I'll just summarize one thing. Oh, wait, we got, let's see. Do you have a maximum estimate for Q1? Between 4 and 8 million. Yeah, I mean, that's probably pretty accurate. I assume you're talking about revenue, Anders. Again, I apologize to any of you guys if I mispronounce your names. But yeah, if you're talking about revenue here, obviously it's a wide range, sure, but between 4 and 8 million is probably close, unless we get some major upfront contracts. Let's see. Yeah, I mean, obviously, this is actually one thing that I've been meaning to make a video on. I want to make a really good video about why, kind of the relationship between all of the different products on the market, Evolve, Chea, and Xtract One, and why people. Because a question I get all the time is, well, if Xtract One is so much better, why do people still buy Chea, and why do people still buy Evolve? And there's a variety of reasons. Price is obviously one of the big ones. That's why a lot of customers go to Chea, especially if they don't think that knives are really going to be a big issue. You obviously have Evolve has done a really, they've cut some corners, and they've exaggerated a bit, we'll say, but you can't deny that they've gotten their brand out there, right? And so that does affect things as well. You go to the grocery store, you go to buy any product, right? If it's a brand that you recognize, you're automatically already kind of biased in that direction. So there's all sorts of things that could affect why people decide to buy one product over the other. But anyway, that's a video that I'll have to try to make later. Other than that, guys, yeah, just to really quickly summarize before we go, revenue, don't think it should be anything crazy. Bookings, somewhere around 10 million, hopefully a little bit more than that. And then cash flow, just keep an eye on that. And I think that should be really exciting to watch that cash flow in the next report, and especially in the Q1 report. And also, it'll be hopefully we might get some guidance or some tidbits, some forecasts for Q1 because it's already kind of almost over at this point. So anyway, thanks you guys for coming and watching. I will see you guys hopefully all on Thursday when we're streaming the actual earnings report. And yeah, other than that, have a great day, everybody. Thanks for tuning in.